Liberty Nation with Tim Donner.
Certain people in the media are trying to build up because they'd love to see a recession.
Why are people talking about a recession? And you say it's here.
There are indicators that the U.S. could be headed for a recession.
Could be headed for a recession.
Inching toward a recession.
They say potential recession on the horizon.
Happening now, recession fears.
What are the odds that you see of a recession?
Recession.
The United States is taking a step toward recession. What does that mean for this presidency?
It's political suicide.
Growing fears about a possible recession.
Growing fears of a possible recession.
At some point, there's going to be a recession.
All right, the R word has reared its head again. One obscure economic metric inverts, and all of a sudden the left says we're headed for a recession. Are we? Joining us to provide an adult, informed opinion on the matter is Andrew Moran, economics correspondent for LibertyNation.com. Hello, Andrew.
Hello, thank you for having me.
My pleasure, as always. So, okay, Andrew, even the left had to begrudgingly admit the economy's been sound since Trump took office. But then, one day recently, we got what's called an inverted yield curve, meaning a short-term bond suddenly offered a higher rate than a long-term bond. And so, the Chicken Littles are crying and hoping and praying that we're headed for a certain recession, to which you say what?
Well, first, I would say that how rich and privileged are these people that they want job losses and shuttered businesses and lost income just to oust someone they hate from public office.
Right.
But no, I don't anticipate a recession or even a severe stock market crash for now. The main indicator, like you say, is the inverted yield curve. Now, it does have a good record. It's predicted 9 of the last 10 recessions. But I think this time around, it's not a reliable indicator, mainly because the central banks have distorted financial markets so much over the years with all its money printing and sub-zero interest rates and intervening into the stock market and all these other unconventional tools that central banks around the world have employed. Just this week, Sweden started selling 10-year bonds at negative 0.25%. So this is important because it shows that investors are desperate for any type of yield. So they'll turn to the U.S. markets, which will then suppress or limit long-term Treasury yields. The inversion might also signal that the Fed is about to introduce accommodative measures, and that is happening this month. It slashed interest rates by a quarter point. It's expected to do the same next month. And there's even a growing segment of the market that anticipates a full point cut by the end of the year, which is what Trump has demanded in recent tweets.
And which certainly won't hurt his re-election chances. Now, can you explain to us civilians, Andrew, how somebody would invest in an instrument that has a negative yield? I mean, I don't understand. Why would you put your money in something that's guaranteed, that promises to lose money?
Well, one of the reasons is that if the rest of the market is offering even deeper negative yields, then you want to have the worst possible one. So right now, you can buy a 10-year Japanese bond for negative 0.1%. But then, like I just said, Sweden's selling negative 0.25% over a 10-year bond. So, of course, you want the lesser of the evil. So that's why everyone's flooding the U.S. Treasuries, because the U.S. has yet to introduce any sub-zero bonds or sub-zero interest rates. Now, Steven Mnuchin did entertain the idea a couple of years ago of bringing in negative rates, but that has yet to happen. Also, I should note that Janet Yellen, before she left the Fed, she said that the central bank could introduce negative rates should there be a substantial economic downturn.
So this is a product of something that you're pointing out that the president has pointed out on a few occasions, and that is that most of the rest of the world is struggling economically. Now, how much does the low growth of EU nations and other soft socialist countries, the kind that are offering negative yields, how much does that actually affect the U.S. economy?
Well, it's important because President Trump has demanded that the U.S. exports more and becomes a manufacturing country again, and that everyone imports from the U.S. So if the rest of the world is struggling economically, then they're not going to be importing as much U.S. goods as the president wants. So all the other countries that are employing these unconventional measures, it'll provide a short-term boost, but long-term they're going to suffer greatly. So Trump wants the higher exports, but then the conundrum is that if these other countries are not advancing, then the U.S. is going to be hurt that way.
Now, quantify for us, Andrew, the effects right now, in real time, of Trump's so-called trade war with China and the tariffs and all of it, and how badly is China being hurt by this compared to the U.S.?
Well, Chinese officials, they're trying to save face. So they're saying that China is going to be able to weather the economic storm, and it's just going to be a short-term stagnation. But when you look at all the measures that China is employing, either in Beijing or in the People's Bank of China, it shows that they're really concerned. They recently lowered the reserve requirement ratios. They just introduced a new benchmark when it comes to offering mortgages. They're providing stimulus to provinces. They're trying to get agriculture to increase by giving them subsidies, which, if you ask local farmers, isn't really working because they keep starting and pausing over and over again. So the trade war is impacting in China significantly. Will it hurt the U.S.? Right now, China just announced a $75 billion retaliation tariff. So the U.S., I think, will be just as affected as China. A lot of President Trump supporters will want to hear that, but from the free market fetishists, again, as Joe Schaefer likes to say, will warn you about the consequences of these trade disputes.
Yes. Free market fetishist Andrew Moran, also known as the economics correspondent for LibertyNation.com. Andrew, thanks for joining us.
Thank you for having me.
That is Andrew Moran, economics correspondent for LibertyNation.com.